That means that traders expect higher closing gold prices as we reach the end of the year. In other words, that's a bullish sign on the market, ladies and gentlemen.
Welcome to Gold Silver Pros.
Hey everybody, this is your host, Rob Keats of GoldSilverPros.com. This is your weekly market wrap-up. We're broadcasting on August 26, 2023. We have a lot of news today and a lot to talk about in the market, so we're going to jump right in. First of all, I wanted to go over the economic data. Right now, we're seeing a little bit of weakness in housing overall. Existing home sales were down from 4.16 million last month to 4.07 million this month. New home sales, however, were up from 684,000 to 714,000. Overall, net housing sales were off for the month with a switch in preference to new home sales over existing. Overall, the market there is down, however. The services PMI, the S&P services PMI measure, and the U.S. manufacturing PMI surveys were both down. Manufacturing has been below growth into retraction phase here for a while, and it's fallen 2 more points to a print of 47 from 49 last month. Anything 50 or above, it's considered break even or positive. Same thing for the services PMI, the bigger part of the economy. It fell from 52.3 to 51. It's still positive, but only growing by a factor of 1 on the scale, not much at all. So basically, we call it even. Overall, both the services sector of the economy and the manufacturing sector, the falls that we've had in them recently are pointing toward a recession in the near term, probably starting in the next couple of months as we get into the fall. Overall, initial jobless claims are down 10,000 to 230. However, given seasonal adjustments, I wouldn't count that either way until we get that seasonal adjustment a couple of months from now. All of the housing numbers from the government are seasonably adjusted and usually down to the negative side, although not always. So the numbers that we get now are not always accurate. Durable goods orders are down from 4.4% positive last month to a negative 5.2%. That's a fall of about 9% in 1 month, which is not good. That's the biggest miss on the report, and it happens to be a miss to the downside, which is not good. Consumer sentiment, according to the U.S. University of Michigan survey, is down from 71.2 last month to 69.5. Again, all pointing towards a likely recession in the economic data. Let's go ahead and go over where markets are right now. I'm recording this at about 2:30 p.m. Central Time today. The Dow Jones is up 146 points, S&P up 16 points, NASDAQ up 74 points, and Russell 2000 all up. Basically, not any particular reason why. It's just not a lot of bad news in the market. So the headline on CNBC is stocks rise Monday as Wall Street recovers from some of its steep August losses. In other words, it may have been that the market swung a little bit too much to the negative side. The momentum is swinging very slightly today, just a little bit to the positive side. Moving over to the cryptocurrencies, not much to see here. Bitcoin's actually down $181.06. Falling below 26,000 for the first time in a while. It's now at 25,940, a little bit of fall in that market. So we look at Ethereum, it is at 1639.47, also down $16.54. Litecoin is at 64.92, down 62 cents. XRP is relatively unchanged, down a penny at 52 cents. And Stellar Lumens is unchanged at 12 cents. Overall, the bond market is about what you would expect. The 2-year is now firmly above the 5% mark, right now trading at 5.039, although that has fallen 0.017 so far on the day. Everything newer or short or term, if you will, than the 2-year sitting above 5%, headlined by the 6-month at 5.586, indicating that traders expect more recessionary pressure within the 6-month time frame, likely indicating they expect a recession this year. That's why the 6-month is printing like it is. The benchmark 10-year is down at 4.204%, falling 0.035 on the day, but overall not super bullish on the bonds. I think the market is expecting more bad news, and that's basically what that is telling us. Overall, the markets are okay on somewhat tepid economic news for the summer. We'll have to see how bad that gets as we go further into the year. 2 major stories to report to you next week, one domestically and one abroad. We'll start with the domestic one. According to the Department of Justice, printed on August 22nd, press release, former JPMorgan precious metals traders sentenced to prison. The subheadline is, defendants were JPMorgan's former head of global precious metals business and JPMorgan's former head gold trader in New York. Reading from the article, 2 former precious metals traders at JPMorgan and Chase Co., also known as JPMorgan, were sentenced today for engaging in fraud, attempted price manipulation, and spoofing as part of a market manipulation scheme that spawned over 8 years, involved tens of thousands of unlawful trading sequences, and resulted in over $10 million in losses to market participants. Greg Smith, 59, of Scarsdale, New York, was sentenced to 2 years in prison and a $50,000 fine. Michael Nowak, 49, of Montclair, New Jersey, was sentenced to 1 year and 1 day in prison and a $35,000 fine. A quote, "The defendants used their positions as some of the most powerful traders in the worldwide precious metals market to engage in an egregious effort to manipulate prices for their benefit," said Acting Assistant Attorney General Nicole M. Argentieri of the Justice Department Criminal Division. The case reaffirms the department's steadfast commitment to hold accountable those who engage in fraud and manipulation that undermines the investing public's trust in the integrity of our commodities markets. Further quote, "As today's sentencing demonstrates, the FBI and its partners remain committed to investigating and bringing to justice anyone who attempts to manipulate our financial markets for their own selfish gain," said Assistant Director Louis Quesada of the FBI's Criminal Investigative Division. Goes on to say, "In order to maintain economic security, investors in equity and commodities markets must have confidence that exchanges are operated in a transparent and equitable manner, and that investments are free from manipulation and fraud. Today's outcome should serve as a reminder that the FBI remains highly focused on combating bad actors conducting sophisticated fraud schemes targeting the securities and commodities markets." A further note in the DOJ article, in September 2020, JP Morgan admitted to committing wire fraud in connection with 1, unlawful trading in the markets for precious metals futures contracts, and 2, unlawful trading in the markets for U.S. Treasury futures contracts, and in the secondary or cash market for U.S. Treasury notes and bonds. JP Morgan entered into a 3-year deferred prosecution agreement through which it paid more than $920 million in criminal monetary penalty, criminal disgorgement, and victim compensation, with parallel resolutions by the Commodity Futures Trading Commission, CFTC, and the Securities Exchange Commission, SEC, announced on the same day. The FBI New York field office investigated the case. The CFTC's Division of Enforcement provided valuable assistance. That is our domestic story, and goes to point out that there is a lot of manipulation going on in the precious metals markets. 10 to 20 years ago, people would have thought you're nuts. My first article that I ever wrote on any blog, which was on Seeking Alpha, or actually the first couple articles, was about manipulation. This is about 12 to 13 years ago. I was told I was a fraud, a phony, and was crazy. But now it's nice to see 10 years, 15 years later that a lot of these people that are manipulating those markets are being brought to justice. All right, on to the second story overseas. The Brics held a conference last week and are inviting new members. Brics stands for Brazil, Russia, India, China, and South Africa. Well, they're talking about adding 6 more nations, which would be in the emerging economies, which would be Saudi Arabia, the United Arab Emirates, Egypt, Argentina, and Ethiopia. Note that Saudi Arabia, for the longest time, has been the main trading partner for oil with the United States and the petrodollar agreement. Now they look to be flipping over to the Brics trade union, along with the UAE, Egypt, Argentina, and Ethiopia. That whole area of the world now seems to be flipping over. In an article at the New York Times, it says, quote, "The 5-nation group of emerging economies known as Brics, which views itself as a counterweight to the West, has invited 6 more countries to join, most of them from the Middle East, during its summit in Johannesburg this week. The choices by the current members, Brazil, Russia, India, China, and South Africa, contained a few surprises, the biggest being the addition of Iran, which joined 3 other Middle Eastern states, Saudi Arabia, the United Arab Emirates, and Egypt. Argentina and Ethiopia rounded out the half-dozen nations tapping for inclusion, while Indonesia, which is thought to be among the top candidates, did not make the cut. The expansion was a victory for China's leader, Xi Jinping, who strongly backed the rapid addition of new members. But Prime Minister Narendra Modi of India was said to be concerned about adding nations close to Beijing. India and China have border disputes and tend to consider each other potential adversaries. Goes on to talk more in the report. Another report came out afterwards on Reuters talking about how this is not quite a done deal and some of the challenges that they have. According to Reuters, quote, "A deal to expand the Brics group of leading developing countries appeared stuck in the 11th hour negotiations at a leader summit on Wednesday, threatening to undermine the bloc's ambition to give the global South more clout in world affairs. Agreement to expand Brics, currently Brazil, Russia, India, China, and South Africa, could allow dozens of interested nations to seek admission as Beijing and Moscow push to forge into a new viable counterweight to the West. The debate over enlargement has topped the agenda at the three-day summit taking place in Johannesburg. And while the BRICS members have publicly expressed support for growing the bloc, there were divisions among the leaders of how much and how quickly. We have agreed on the matter of expansion, said South Africa's Foreign Prime Minister Naledi Pandor on Wednesday. She told a radio station run by her ministry, "We have a document that we have adopted which sets out guidelines and principles, processes for considering countries that wish to become members of the BRICS. That's very positive," she said. However, a BRICS member country official in direct knowledge of the discussions told Reuters that their leaders have not yet signed a finalized admission framework. So while they're interested in attracting the new boys to the yard, if you will, they haven't developed their milkshake. Very sorry. Bad play on some popular songs. BRICS countries have economies vastly different in scale and governments with often divergent foreign policy goals, a complicating factor for the bloc whose consensus decision-making model gives each member a de facto veto choice. So it's not a done deal there yet. Let's get into what you guys come here for, and that is the precious metals report as we get into the market data. Here we're looking at the CME Group's gold futures volume and open interest, and as you can see, dating back to the end of July, the overall volume in gold has been a little muted, although we had significant market action, which we'll get to in the Commitment of Traders report here in a moment. Just going over the data that we have as of Friday, we see that December is the big month, 366,000 open interest at close. Total volume on Friday was 166,988 contracts. We had 2,153 EFPs. That is exposure taking this contract over to the OTC market in London to either get the metal or exposure to price. That was as of Friday's data. If we pop up and go to Thursday's data, we had 2,898 contracts in gold go over to London. On Wednesday, we had 4,562 last week. Tuesday last week was 3,166 go over to London. And on Monday, we had 1,935. I point that out because sometimes they may be hunting for metal or playing price arbitrage, but it does speak to the fact that the two markets are connected and traders will work in both markets. Looking at today's trading data as of about 1:30 in the afternoon, we see that gold is trending up about $6.90 on the strength of 108,000 closed contracts, closing at an average of 1946.80 on the December contract. We've had contract closures in some other months, much less, 5,500 in October, 358 in September, 99 in August. So we pay attention to the biggest month because it tells you where gold price is going to be going. That's today's data. What happened last week on Friday? Well, we see December was still the dominant month. We had estimated volume of about 167,000 contracts, closing down $7.20. If we back up a day on Thursday, we closed down about $1 on 137,000 contracts. But on Wednesday, it got really interesting for both gold and silver. On 170,000 contracts, we closed up $22.10. We'll see something similar in silver here in a moment. Going over to silver, looking at the volume, silver has had much higher volume since the end of July than gold. It's been almost the opposite, where gold volume has gone down, silver volume has gone up since the end of July. And you see it getting particularly frothy on the 23rd. And we'll see what happened on that day. Going to the tail of the tape, so far looking at Friday's data, this is Friday close data. December is the big month. You still have some trade in September, but that's starting to fade. 5,500 contracts rolled out of September. Most of those into December. You see 4,700 added with a spattering of contracts added to other months. Not a lot of deliveries because you only had 2 open contracts in silver, so only 1 physical delivery now, but where they could go over to London to get exposure through the EFP. There were 320 contracts as of Friday. Thursday, there were 400 EFP contracts. Wednesday, there were 1,600 EFP contracts. On the same day that price rose in gold and silver last week, there was a lot of movement over to London. And then on Tuesday, only 25 EFP contracts. Looking at the closed data in the settlements, we have what looks like 1:30 p.m. data today. Midday data is available on Monday's market. Again, trading heavily on the December contract, 30,698, but you also see trading on September. On September contract up 18 cents, on December up 22 cents. That means that traders expect higher closing gold prices as we reach the end of the year. In other words, that's a bullish sign on the market, ladies and gentlemen. Looking at Friday's data, silver was actually up while gold was down. Silver was up about 8 cents on December's contract and 4 cents on September's. Looking at Thursday's data, silver was down. It was down 13.5% on December's contract, 16.2%, or sorry, 16.2 cents on September's contract. On Wednesday was up almost a buck. December contract up 94.7 cents on December's contract, 94.2 on September's contract. Going over to the Commitment of Traders report put out by the regulator, the CFTC, the Commodity Futures Trading Corporation or Commission. We're looking at the numbers as of August 22nd, meaning we're looking at old trading data because it takes a while to collect. At least this is only about 5 or 6 days old, which is good. We look at the teletape where we look at the summary totals of what's going on. As we look at the producer merchants and what they're doing in silver, these are the people that produce it, i.e. the miners, and the merchants that use it, i.e. everybody else that actually uses it in an industry. You saw them increase their short positions by 1,003 and increase their logs 585. That means the producers likely expect the price to go up, and so do the merchants. So they're taking their opposite positions. When you see them both going up like this, it means we're likely to see higher prices. The swap dealers didn't have a lot of movement in silver. They had more in gold. They dropped 764 longs and 642 shorts for a net gain in the short position of about 120 contracts. Not really much, really, given the overall numbers, but they're still net long. Look here, net long 35,609 contracts to 29,753 short. That's a bullish position continuing by the banks for 3 straight COT reports, 3 straight weeks. A bullish position by the swap dealers or the bullion banks. Overall, the managed money dropped 32,666 shorts and added 4,787 longs for a big time long move to the tune of about 8,000 contracts. Managed money is going along silver. Overall, the other reportables, the wealthy family offices are going short. They dropped 2,512 of their longs and added 525 shorts. You see who's doing what in the silver market. Let's go over to gold. Same disaggregated commitment and traders report from the CFTC as of August 22nd. This is older data, previous week's trading data, as is normal. Overall, the open interest in gold fell about 3,300 contracts. That is because when you go to gold and you look at this, and there hasn't been a lot of interest since end of July, that's why you see the overall fading contracts here in the summary column for overall open interest on the CFTC COT report. That's how you read that, and that's how you connect the data points. I want to teach you guys how to do that so you can do this for yourself if you're looking at what's going on in the markets. Overall, looking at the producer merchants, this is this first column of data right here. We see that they have dropped 3,452 shorts and gone long 476 for a net long change of about 3,900 contracts. That's bullish on gold for the producer merchant category. The swap dealers went majorly bullish, dropping a big whopping 16,000, almost 500 contracts of gold shorts and going long 478 for about a difference of 17,000 contracts net long for the week. That's the 3rd straight COT report that they're going long gold, or at least dropping their shorts. The managed money took the other side of the trade. They did 12,366 short, adding and dropped 8,000 long. Somebody tell the managed money that the 2 best months for precious metals historically are September and October, and the 3rd quarter is the most bullish for gold and silver. They're going to lose money here. They seem to always lose money to the sharps, which are the swap dealers. The other reportables went net long, 1,323 contracts in gold. That's where you have the commitment of traders report. That's where we are for the week. Let's give you a quick summary. JPMorgan added again, 2 people go to jail and pay fines. These are heads of a trading unit and head of precious metals overall. That's an indication of what JPMorgan may have been doing manipulation-wise in these markets for some time. That was a conviction for years, I believe 2008, 2016, if I remember correctly, an older investigation that finally ended up with 2 guys going to jail. They've been manipulating markets for a long time. Remember, in 2020, $920 billion fine for manipulating the precious metals markets and the treasury markets. Overall, the economic data is fairly tepid. We've had some weakness in home sales. We've had some weakness in the purchasing manager index. That is sort of the industrial side, or the producer indexes, if you will, for both the services and manufacturing sector. They don't expect it to do well, so they're purchasing less, and because the consumers are purchasing less. Overall, gold and silver prices have held serve. It looks like the bullion banks are taking long positions or longer positions in gold and silver. They're net long in silver and quickly draining their short position in gold as they probably expect prices to go up in the fall. Research shows that prices do best in the 3rd quarter of the year, up 3.6% on average in the 3rd quarter, up 1.5% on average in the 4th quarter. And as we head to recession, I expect gold and silver to go up more than the average there. That is going to be your weekly market wrap up for August. This last week of August of 2023. Thank you, everybody, for joining the program. Stay tuned. Tomorrow we have our live stream at 1 p.m. Central Time on Gold Silver Pros channel. Until next time, this is Rob Keents with GoldSilverPros.com.
Hey, thanks for watching. We selected these videos just for you. Check them out. And remember, $4.99 a month keeps the lights on and the channel going. So join our Gold Silver Pro supporter membership. We appreciate your support. Keep stacking.